TGIF, Alexander, Mary, Mike, and Ryan, and the whole band.
Hey, Dale.
Band is here. Thank God it's Friday.
Indeed.
So, I have to respect the way the currencies bounced back yesterday. They don't want to go down, do they? Or
Nope.
they're taking their time. So I saw, members should check out Grega's look at the euro. So what do you think going into the weekend? EG, maybe you're going to get a better level. You think it could come back down here, Ryan, to buy it?
Yeah. I think we're possibly going to get a break at this 86, 87, 86, 90 area. I don't think we're potentially going to see anything massive. I think we could get a move down to maybe sort of 86, 50-ish, 70s, 50s from there. As far as longer term, as far as longer term goes, I'm really not sure. It could go either way. This one, I'm still not happy with the fundamentals on either side to take a real position yet.
Yeah. So why are people working this pairing this way? Could it be that the old story about the wars? That if you're on the European continent, you're better off being separated by the English Channel? Could it be that?
Yeah, there's that, but then you've got the other side. You've got all the fiscal stuff going on in the UK. Doesn't scream at you to buy the pound with both hands. So you don't want to buy the euro, you don't want to buy the pound. And this pair sits in 100 pip range for weeks.
What are you doing with Aussie lately here after this pullback?
Yeah, it broke the level I was looking at, 66.60, and I thought, oh, here we go. We're going to see the low 66s. But it turned around in the 30s, got back above the area, back into 67. It keeps the rally alive, that move, as long as we now continue to hold that 66, 70, 60 area. But we've got to get above 68 pretty pronto.
Yeah, about unchanged on the week. But compared to, I think the euro's still higher in the week, about the same. It's the pound that's higher in the week. So
yeah, similar pictures all round, really, though, isn't it?
Yeah, I'd say if the Aussie has a little bit more weaker short-term structure than the other two.
Yeah.
Just and I looked at Canada yesterday, and we were looking. It had a good week. I mean, in comparison, right? Aussie unchanged, USD CAD up. So we never got to 35 on this move. We got close, but it looks like it still wants it.
Yeah, it's another one. It's stopped going down for the moment.
Yeah,
and there's only one other way it can go. Dollar yen, another one. We tried the downside, we tried the upside, and ran into trouble at that 140, 65, 80 area. And yesterday, we're going to range until we break any of these either side.
Yeah, it looks like if we start closing above here, the formation measures what? 43?
Yeah.
Okay.
At least up to those two candles you've got, what are they, around about 142.30-ish?
Yeah.
Just after the initial move down, a bit lower down. Yeah, those two there.
Yeah. Okay. Well, there are a lot of people thinking we could have a bear market rally in the dollar, back to, 108 or so. 109, that would fit with the yen being able to do that, right? They both look pretty similar down here.
Yeah, I think that's entirely possible. Entirely possible.
I don't know. We're starting to turn here too, and I think the 10-year could get to 4, so that ought to also be supportive of the yen, giving us a pop to correct the crash. What do you think, K-Man?
Good morning, Dale. Good morning, everybody.
Good morning, knife catcher.
I I just went out this morning buying a new pair of ping pong
Gloves?
rackets.
Ping pong.
And
Yeah.
I'm playing ping pong, you know, like
It's
buy
safer
low,
than
sell
catching
high,
knives.
sell high, buy low, and it's like a ping
Yeah.
pong game right now.
Okay.
And yeah,
It's a good metaphor.
that's what I'm doing with really with the currencies right now. I mean,
It's a
you were
short
showing
week.
there on the you were showing on the US tens, and that's really what is driving the dollar yen still.
Right.
Um,
Yes.
yeah, if your assumption is correct, and we are going to see at least the moving averages or so,
Yeah.
then we should be trading upper side of the latest ranges again. But it's really we've got to respect the levels. We identified a pretty decent range. 138 down to high 137 on the dollar yen, and then the top side 140, 60, 70, 141, figure 15, and we're inside right now. And as long as we're inside, we trade the range. The others, there's one though that is of interest, I think, going into next week is the Kiwi. We've got RBNZ up next week. The expectations for the rate hike have been upped a little bit to 75 BPs possible. So the Kiwi is doing well against its cousin, the Aussie dollar, as well, and against the dollar as well versus the rest. So perhaps Kiwi can push through a little bit. Perhaps could be a buy the rumor, sell the fact once we are the 23rd, but it's worth keeping an eye on it because it's pretty strong yesterday as well. 60-60 support on the Kiwi dollar, and it held rock solid, and we're trading 1.5% above already.
Okay. All
So
right.
those are the
all right.
ones. Metals not really inclined to do much. We need to regain 21 and a quarter, 21.45.50 on the silver to get going again. But I'm not sure with US rates if we can go there with Chinese opening, not reopening. We don't know. I mean, that should be one that pushes the metals up a bit if they fully reopen. But it's
So I've
also
had this
slow over there.
I've had this blue line in the silver forever.
I'm
Yeah.
sorry,
Look what
guys.
it held.
Can I interrupt really quick? And I really
Yes.
want to. I'm doing this just for a reason. Crude oil just bounced off the 78% retracement, the $80 level. This is a big fib level that I think everybody should be watching. We just bounced like 30 cents. We were coming off aggressively all morning, and so if you guys are trading crude or anything that's crude related, pay really close attention if we can hold above $80. Okay, sorry. You guys continue, and I'll come in a little bit later. It's a trading and live show. Come on. Sorry.
Now we don't know what to say anymore.
Yeah.
What?
Dale,
What do you think?
Shall we just put on our coats and go?
No.
Good morning.
Let's talk about.
Sounds like you need a savior. I don't have much to say,
Yes,
actually.
you
are.
How are you guys? Everything okay?
Good, buddy. Yeah.
Yeah.
Glad
So
it's end the week.
so we got more hawkish Fed members, and really, with the exception of Lael Brainerd, we have been hawkish pretty much all around. So I'm going to say what I said on the Flow Show this morning, which is really don't try to fight the Fed. Not yet. Nobody's fought the Fed and won, or maybe I don't want to say nobody. You're winning. Okay, in the long run, I mean. Anyway, yeah, you're not human, Brian. But I have this fear that Powell is going to disappoint, as he has done over and over again. And if you look at the vast majority of Fed speakers, they tell us the same thing. We're going to keep going after inflation. And yes, we've had 3 or 4 readings which are going lower, but still the levels are very, very high. They do realize that there's a lag between the Fed action and numbers turning, but they've said also that they would rather over tighten and stay higher for longer than needed than underdo it. And I guess they want to save some credibility, which I want to tell them they have none left, but that's what they want to do. So I think, as always, they're going to be too late to start and too late to finish. I would be very careful. really be very careful. Having said that, what did I write yesterday in the chat room? Early European hours. The S&P was 39.15, 39.20. I said, look, I think this market feels like it wants to squeeze into the weekend. And we're now already 65 points higher in the S&P. And I think that the short-term trade and the kind of the path of least resistance is still to go higher. Remember the put-call ratio we talked about yesterday? It just feels like the short term wants to go higher. But I tell you what, if we get to anywhere close to 4,100 in the S&P, I think that's going to be a really, really great selling opportunity.
Okay,
And
well, you know, that's going to be right into the Fed's face. So that even gives them more cover.
Yes, because remember
rates,
what Danielle DiMartino Booth said in the Trader Summit event that we did recently. She said the more they see markets behaving, the more they can
latitude they have.
Exactly. So have no doubt. I mean, obviously they're humans, they can change their mind, they can do anything, but I think the most likely scenario is they disappoint. So I would be very aware of that. If you want to be carrying long risk trades, some people say 4,100, other people say 4,400. You know, everybody has levels. Fundamentals still tell us that with tightening, with everything that's happening in the world, there's no real reason for equities to be rallying yet. There will be a pivot. There will be less tightening. There's going to be easing, I think, and that's going to be the time when you say, right, that's it. The punch bowl is back here, and we can all drink from it. So,
what do you think people are going to be saying if we break this trend line from the all-time high?
So 4,100-ish, right?
4,120, 40, right in there.
If we break that, you can bet people are going to get even more bullish.
Right.
And I think if we break that, most likely it's going to be a false breakout. That's my view. But I actually think we probably won't get there. We're probably going to fail just before. But, it's difficult to predict. And that's why I don't like to predict. Actually, I don't trade on predictions. I look at price action, I look at levels. And if they match what my macro thesis is, then I trade it.
Okay.
The Christmas rally is happening right now, Mike. Yeah, it could be. It's a bit early this year.
Kind of a negative week in silver.
Yeah, it's not great. We had a really strong push above 22, but we've retreated. It's not
not yet.
Not yet.
Close. Yeah, not yet. And you're getting a reprieve in the gold silver ratio. It still looks pretty good. I mean, are we going to make another trip down? I don't know, but bear market rally in the dollar and a breakout in this, I didn't like Stel that it couldn't fight its way back with the currencies. The dollar, gave up most of its gains in the last 24 hours. And, silver has a little bit of a bounce here, but I'd like to see it act good with the weak dollar.
It's been underperforming a little bit, but look at gold. Gold is pulling back a little bit, but I mean, look at the recent move and look at the pullback. It's nicely corrective. That's what I'm going to say. And as long as gold's going up,
that's what the gold silver ratio is saying, right?
Exactly.
Gold should hold up better.
Yes. And yes, exactly at the moment. But I think the gold silver ratio is going to drop. Maybe it reaches that trend line resistance. What is it, 85? But I think it's gonna keep going lower from there. So that means gold performs and silver hopefully outperforms. But again,
I think it's going to break out and go. Okay, I think you could see 90. I think you could see 90 in the 90s again.
You could do. That will depend on Powell. That will depend on Powell, and if we do see a hawkish Powell, that's probably going to get broken. So you have to understand what risk you're taking with every position you have. So
I do, and then I don't. We think,
Coach, that's not good coaching.
Oh, what is it? We do, and then sometimes we don't.
You know what happens? It's usually, and good morning, guys. It's usually it's usually for me anyway, it ends up being my ego gets in the way, because I'm, you know, have a good strand of really good trades, and then next thing you know, my risk management kind of suffers as a result because of my
Cockiness.
Cockiness. Yeah, I guess that's that's the best way to put it.
Hubris.
There you go. So how you guys doing today? TGIF, by the way.
Oh, we're wiped out, Blake. You must be too.
What, wiped out? No, I'm ready to go, man. I was hoping today was like Thursday, so we can have another day of this.
I need a pint of your blood for a transfusion.
No, I'm just kidding. It's, you know, since I've been out most of the week, you know,
it's the emotional worry and drain and everything and unsettledness.
Yeah, we got
you're
past
trooper,
that once we knew what was happening. It was no big deal, but it was more of the just back and forth to and from places. But hey, I wanted to talk about a few things. You know, first of all, it's Friday. You've got a good guy coming up to be interviewed. Excuse me.
Do you know him? It's his first interview here.
Yeah, actually, we met for, hold on, let me see if I can find a picture of Chris and I. We met for drinks, and I think I bought him a couple of drinks the other couple months ago. Let's see. Yeah. Yes,
does he live
sir. I've interviewed
Blake
him.
lives a double life. He doesn't tell us, right?
I have, it's on my phone. I have to show you guys on my phone. Anyway, Chris and I, we met up for a couple of drinks. He lives here in the area, and he's a Marine, also, you know, trader, trades a lot of equities. He used to work with Alex over at Macro Ops. He's you know, so yeah, we met actually recently over the last few months. So you guys are going to enjoy him. So make sure you stick around for that. But I want to talk about a few other things. First of all, I'm sorry I had to interrupt when you guys were talking earlier about crude, but I wanted to bring up crude because crude has been sliding all morning. I mean, for those of you that don't or haven't been watching, you've been probably seeing this move down in crude all through Europe. We're at the 78% retracement right now, and I had a conversation earlier with Chi in our chat room. He might be listening in. He's a long time you know, friend in of our community, and even before we started ForexAnalytix. Anyway, Chi was just asking, hey, is this a double top here? And I want to make something clear really quick. Double tops and double bottoms, or triple tops, triple bottoms, usually when you see those are retracement plays. So that means that that you know, coming off of a, let me go ahead and draw this out. Coming off of a big you know, sell off like this, like you've seen maybe over like the course of this year, you'd be looking for a double bottom to give you a reversal going the other direction. Typically, I don't look for double tops, you know, because that was his question. Double tops is continuation patterns, and in this case, if you had a double top here, it would actually, you know, suggest that we're going to new lows, which it doesn't mean it can't happen. It's just I won't trade it as such. You know, I won't sit here and go, okay, it's a double top, I'm now targeting here. No, that's obviously good resistance, and you know, we are breaking down. Chances are we're gonna trade back down here. But if you're targeting down at like 70 bucks by doing this type of pattern, chances are over time you're going to end up being more wrong than right. So when you look at chart patterns give you probabilities. Like if I can look at a you know, an ascending wedge and say, okay, I'm seeing a reversal out of that ascending wedge, and I know based on my experience, probably like 70 to 75% of the time they tend to work out going higher. Then I know that over time, even though I'm going to be wrong certain times, I know over time it's going to be, you know, it's going to pay me well. If you trade like this as a double top and you try to trade it as an extension, meaning that you're going to, every time you see a pattern that looks like this, that's in a downtrend, and you go double top like this, double top, and I'm expecting a breakdown. And if you keep targeting this, my guesstimation is you're going to be wrong more times than you're going to be right. So remember, double tops and double bottoms, when you trade them, they tend to be retracement patterns. So that doesn't mean that crude can't come down a little bit further, but that means that I'm just wouldn't be targeting down here. I hope that makes sense to you guys a little bit. I thought I'd take today as an opportunity to do a little bit of teaching, because not all the times do we get to do teaching, because it's live market environments. We don't have a whole lot of time together every day, not in a public forum, because our private shows, when we're sitting with the ForexAnalytix community for hours a day, during the morning edge and daily roundup and in our communities, we take a lot more time to explain some of these concepts from an educational standpoint. But when you and I, we only have 30 minutes together, don't always get the opportunity to explain some basic theories and training with you guys. But that's the kind of stuff we do with ForexAnalytix on the side. So anyway, just want to take a little bit of time to talk about that. Keep in mind that crude oil is at the 78% retracement. One of the things I need to point out, and it's a tweet I just made, is the dollar Canadian is not responding very well to crude being down as aggressively as it is. You see crude. I'm sorry, were you going to say something?
Yeah, Blake, can I just say something on crude? Is that we have expiries in crude today, and the last trading day of the day contract, I think, on Monday. So that may have an influence on what's happening in crude right now.
Absolutely. Yeah. Thank you for bringing that up. I think Mike brought that up a little bit earlier, and that's something that definitely needs to be explained. And yeah, it's going to create a little bit of volatility, but what's not moving is the dollar CAD. And you've seen the dollar CAD slowly grind higher through Europe. How many people in European trade have seen, the sell-off in crude? And it's like, hey, I'm going to lean into selling Canadian dollars. I'm going to sell some Norway, as a result, and they're just not getting paid. So if we do get a bounce in crude, you're going to see a swift reversal in the dollar CAD, probably moving lower, and the US dollar Norwegian krone moving lower as well. So just, you might get a snapback there. So that's just something I want to point out, especially when you have the Aussie that's trading at highs of the day. You have Kiwi that's trading at highs of the day. Look at the Kiwis about ready to break out. That's a pretty massive move right there that you need to be respectful of. So if you're seeing, moves like this in commodity currencies and you're shorting risk, you got to be thinking twice about what you're doing. And I have to point out that the S&P held, we were obviously, here's something. Do you guys want to know, one of the things that we do as a team is our patterns in play. I'm just going to show you our closed patterns in play over time, over the last, hey, Steve Stelios, how long has it been since or Dale, you'd know this. How long has it been since we launched ForexAnalytix?
6 years?
Over 6.
Yeah.
Over 6 years. So over 6 years, you can see our statistics in patterns in play. And this is through the team. This is not just me. It's Stelios, Steve, Andre, Leandro, you name it. It's just our team doing this. Winning percentage patterns in play at 52%. Okay. Percent return over the course of the last 6 years. You can see the average risk reward. Not obviously, not all of them are going to be making money, but what's really interesting is I want to show you just yesterday. I closed the pattern in play yesterday at 39.26. Why did I do that? Because we are at support. We are at the 38% retracement. So knowing that we are at the 38% retracement at a very pivotal level in the S&P, if we continue to hold this, I think the chances are that we are going to, and that's why I closed that short, chances are we're going to see this 200-day moving average again and maybe even channel resistance. So you got to be very respectful of the fact that the S&P has held support over the last, just let's call it this week. So, you're going to have a lot of people that are frustrated going into the end of the week that are short, that are not getting paid. So what are you going to do as you come into Friday? I mean, are you going to stick around? Dale, are you going to stick around on the short side?
It seems that people are feel more comfortable going home long than they have for a while.
It's an interesting. I was reading a lot of the comments about everybody's expecting a Santa Claus rally. Look, seasonality does have some play. I'm not necessarily looking at it this year as playing it as a Santa Claus rally per se, because I do think that we're going to face some really serious headwinds as we go into the final months of 2022.
Santa can't get coal, like
Santa. I don't know. Santa might. Santa might get some frostbite on his nose.
He's got no coal this year.
Anyway, so I would just be watching the S&P as we get to the 200-day moving average and maybe towards channel resistance. Look, that might not be far away, and you guys might be thinking, well, maybe I can start shorting here. There's still a lot of time. This literally could take us 2 weeks and a lot of grinding to get up there, to get another 100 S&P points higher than where we're at right now. But it indeed could happen, right? One of the things that we've talked about here on our shows is you got FOMO, you've got institutions underperforming. K-Man, Ryan, you guys have been around long enough. How bad is it this year, with the S&P down where it's at and the index is down where it's at and portfolio managers having to chase markets? Is that a real thing based on your experience?
Well, I think we've seen enough articles about how the 60-40 is not performing well at all this year.
Exactly.
But I'm actually a bit surprised about that, to be honest with you, because they announced everything last year, what would happen this year, and the market just didn't believe it. So I'd say if they don't perform, or some of them will underperform because their models are made the way that they can only be long or stuff. So it's logic, but some of them I'm a bit perplexed, let's put it that way, to see that they are underperforming that much. But I don't know whether we can talk about like panic or let's say capitulation, but it is a fact that even the professional bond traders have been very surprised by not exactly the move, but the volatility of the moves. That is something for bond traders which is a bit new. Which I think has been accelerated by the amount of
going
around the market, and when bond yields move, you have a lot of money to shift around. So and that I think has dented some of the returns as well.
Like it could be worse. They could have been in the crypto markets.
Yeah, well, and you know what? You'd have to assume that with the adoption of crypto over the last, let's just call it 5 years or so, especially from an institutional standpoint, with Wall Street, bringing in CME products, various banks like Goldman Sachs and others, even developing some crypto desks. You have to imagine that institutions have some exposure to a certain extent, whether you're talking single digit exposure percentage wise, but it's still exposure regardless. So not only is K-Man pointing out the 60-40 split, traditional portfolios aren't working out, but then you got some crypto exposure that definitely looks like crap. So how bad or how much catch up do you have to play when you're dealing with the broad markets, so you don't see redemptions going into first quarter 2023? I think that's a real thing. What do you think, Ryan?
Ryan's
Hello?
redeemed.
Yeah.
Hey, all right, we lost you there for a second. Hey.
Yeah, I was going to say, it's possible, but there's plenty these days that aren't just long funds. There's plenty of short cryptos. The short bond trade has been the widow maker for probably decades now, 2 decades.
Yeah.
And now, if people are on the right side of it, they're finally making their money on it. And the same with shorting stocks, shorting cryptos. The world isn't just a let's go long place anymore. There's plenty of dynamic funds who will go either way.
You're right. And you know what? I just realized we have some Canadian data coming out because Stelios was off his game and he wasn't letting me know that we did have some data coming out. Right, Stelios? Right?
I'll wait for 30 seconds before. Okay, 30 seconds to data.
All right. Oh, thank you. I appreciate that. All right. We have some existing home sale. I thought we had Canadian data coming out. I'm sorry. It's not my bad.
We do. CPI.
Existing home sales is later.
Oh,
Yeah.
okay. All right. Well, here we got some. Oh, wait. Do we have?
Yes, PPI.
Oh, we have. Yeah. Canadian data
PPI.
coming in.
And raw materials prices as well.
Yeah, RMPI and yeah, and that's not on here right now.
Syrup-
I don't know why that's not
Syrup
on
prices, yeah.
Tony's yelling at you still.
I know.
Beaver skin prices, if they're up. Oh, wow. PPI, 10%, 10.1%. Raw materials, 9%, a little bit softer than the month before, but PPI in the main higher.
All right.
No-
Well, that
no
hasn't
peak
had any
inflation for
effect
Canada.
on. I'm sorry?
No peak inflation for Canada just yet.
You know what? And I think that's going to be a common theme for a lot of us going into this next year. So, it is going to be an interesting end of the year, especially we have one more Fed meeting coming up in December, which is might theoretically could ruin the Santa Claus rally that everybody's hoping for. Remember, the Fed does meet, I believe it's December 15th, if I'm not mistaken. So keep that in mind. Hey guys, I want to say, I'm sorry I've been kind of mind absent this week. It's been a really busy week for my family and myself with us in the visiting the hospital way more than I want to be visiting at the age of 50. But it's, I'm excited for the weekend, and I'm going to say thank you all for hanging out with us. I know Dale has an interview coming up with Chris. Chris is like I said, I've met him in person. We had a few drinks a few months ago, so that was nice. Chris has to take me out this next time. But before I turn it over to Dale, I want to say thank you to the team, to the ForexAnalytix team. Make sure you guys check out the ForexAnalytix. One way to get involved in ForexAnalytix is check out the Trader Funding Program. We authorize new live trading accounts when people pass their assessments every single week. We have more and more people that are now trading our money and not risking their own money. So if you want to check that out, check out the Trader Funding Program. I'll put the link in the chat box so you guys can have it. Watch that 2-minute video. Dale, team, thank you guys so much.
Cheers, guys.
Thanks for the coverage this week, guys.
Yeah, and have a great weekend with your family, Blake.
Thank you. Thanks, everybody.
And team, thank you for laying it all out on the court once again. And our season is 12 months a year, unlike professional athletes that lay it out there for a season. Our season never ends. So thank you, Ryan, K-Man, Stel, Steve, all you guys, Grega. And it's my pleasure to say hello and welcome Chris Stover to F.A.C.E. Hi, Chris. I didn't know you knew Blake.
Hey, Dale. Yeah, him and I connected earlier this summer, and yeah, I made him buy me some beers, and
good for you.
Made him. We arm wrestled for it. And good morning, Chris. good to see you, buddy. And obviously, I lost. I mean, that's the thing. I lost. Anyway, hey, I'm going to let you guys continue on.
And we're continuing to give to you, Chris. You're a guest on F.A.C.E.
You know what? I'm gonna give me a second. I'll pull up a picture of Chris and I.
It's up there. Okay.
I'll find a little picture of us in a second. But you guys have a great interview.
Thanks, man. So, Chris, if you want to share the screen, you know where it's at on Zoom, or you just want to talk.
Let's. Why don't I share my screen?
Okay. So Blake told us a little bit about your background. I went on your Twitter stream, and you were in the service. Was it then that you started becoming interested in the markets, or prior, or after?
Well, I always, like any story, I knew I was a stock market genius when I was in junior high or something like that.
Wow.
I just had this calling. I'm kidding. Every interview starts out that way, I think. But yeah, no, I'd always been pretty much excited about getting involved into the markets. I had no idea what that meant. I knew I wanted to be a trader. I didn't realize that when I went on all these interviews at places like, those of you might remember Payne Weber, some of the in the late 90s during that bull market. As I got out of the Marine Corps, I was like, okay, yeah, let's get right in and let's I'm gonna go to Wall Street. I'm in. And I didn't realize being a broker wasn't being a trader.
No.
And
how did you like making cold calls?
I never made it that far, because on the interviews they basically said,
okay,
how fast can you do 200 calls a day? And I was like, I don't know, I'll be busy buying S&Ps, or I'll be busy, day trading Broadcom or something. And so never really made it that far. But like Dale, I got into prop trading actually back then in the late 90s. And that was my beginning.
Okay. All right. So are you self-taught? Did you have any mentors or books that you read that, helped you along the way to make a breakthrough or two?
Yeah. I was lucky enough to start out in a prop firm and get on a prop desk with some experienced traders. And from the very beginning, they really taught me to just stop focusing on the news, stop focusing on the hysteria, and find some repeatability, something that you can see often enough, you can structure risk around it, and then, statistically use that as an edge over time. I didn't fully understand it as a former Marine right out of the infantry. It was more of just kind of like, yay, I'm not doing stupid things there anymore. And so I'll share my screen here a little bit, by the way. But
okay.
It was the first book I ever got was somebody before I even got out. There you go. Thanks. Was Dummy's Guide to Wall Street or something like that. And at least it gave me the vernacular to understand what I was looking for, what I was, what options were, what bonds were, and what stocks were. And then, really there's two great books that helped me along the way. Dr. Van Tharp's system trading style, and his book, Trade Your Way to Financial Freedom, and the Super Traders books are all very, very good on, teaching you how to just find a system and stick with systems. And then Mark Douglas, Trading in the Zone, both really pivotal books, very, very great books that got me out of trying to pontificate long-term, world changing things with my little, whatever retail trade station account or whatever it was when I was, in the beginning, and, trying to like predict bond yields or something like that, which doesn't move the needle right in that level. So
so I'm going to unshare, and you could share, and let's take a look at your setup and tell us what you're using to be actionable in the market.
Let me get the different one. I got here we go. There we go. Okay, bunch of squiggly lines, I assume. Everybody sees those.
Okay.
So what we have here, this, as I just got done saying, long-term thinking and all that. Now I'm going to pull up a long-term thinking chart. One of the things that's most interesting to me right now is the overwhelmingly bearish environment on equities, on pretty much everything right now. And it's not a like, oh, this sucks. It's not like the 2008 timeframe, which was, for those of us that lived through it, a lot more challenging than it is right now. I would say right now it's just everybody's just kind of like, yeah, we're in a bear market. Everybody is around here. We're no longer bull market ragers. Now we're like professional traders. We're still around, and everybody kind of has this agreement that we're going to go lower, that the markets are going to spend the next 6 or 24 months going down, and that it mostly, I think the thing that everybody is biggest on is that it's going to be a straight line. I think 3,000 is something on the S&P, for example, that everybody seems to be really stuck on.
Yeah.
And
pre-COVID highs.
There you go. Everybody's there. And look, I'm not saying no, and I'm not saying yes, but what I'm looking for is I'm looking for ways to take action in the middle. Like, we're traders. I'm not somebody who Bloomberg would find super interesting to come in and talk about a day trade on crude dropping below 80 or something like that.
So you don't do it on a weekly chart, I would bet.
Well, so what I do, my idea, definitely not actionable, but I start everything with top down, as you would, and I get things into what I call market regimes, and there's 5 versions of the market regime. So I start with it's directional. You've got bullish, you've got bearish, and you've got sideways. So 3 easy directions, and then you have high volatility and low volatility. So that makes 5 different directions, and each one of those represents a I use it as a, pull it up here actually. I use it in a way to just identify, it's like a calendar. The idea is that you would be, you know, if I said, hey, Dale, let's meet up in Montana, you'd be like, Chris, I love Montana, let's go. Key question, sir. What day of the year would that be? That's a super important fact in Montana, right? If I said January, you would not need your, you know, board shorts, your flip-flops or anything. It's big coat. Same thing here in Arizona, right? If I said January, you'd be like, oh, that's a nice time of year. If I said July, you'd be like,
forget it. Yeah,
forget it. And so it's the same sort of thing. I use statistics, volatility-based and directional-based statistics, which is not really hard. It's a previous 100-period average change of the previous day to today's close. And it just averages it over the last 100 days. And that gives you, it's this histogram on the bottom here. That gives me this direction, right? If it's rising, you can see that it's lagging, but it's also rising along with the market. And then it has ranges, and those ranges coincide with different market conditions, kind of, you know, summer, fall, winter, spring type comparison. Right. And so different seasons. And so when you get to extreme levels, that's when you get these blow off tops and big spike bottoms. And those sort of things tend to be reversals. Now, just because they happen doesn't mean they're reversal. If we look at my chart here, this blue area, this is what I consider bull volatile. So it's the most volatile time of a bull market. And that's usually categorized in the most obvious times are, you can see how it's just up or up or up or up or up. It's just up or straight through.
Parabolic. Yeah,
exactly what it is, parabolic. So it's a requirement for a major market top. But as you can see here, just because it went there doesn't mean it was a major market top, but it is a requirement.
A top, not the top.
It's just, hey, it's winter time. It doesn't mean that because it's December 22nd, I believe, that we're going to get a major blizzard on the exact day that winter starts. It's just that, hey, it's winter time. It's going to be cold. We're probably going to have some snow. It's probably going to be bad. So it just puts the environment in place. And what that does is that removes probably like 5 other type of environments that you would be looking for, right? You're not looking at a major, you're not looking for markets to just kind of go sideways at these.
What season do you think we're in right now, Chris?
So, okay. So the lagging indicator says we're in a neutral season. So all the volatile bearishness is out of there, at least in, it doesn't mean that it can't happen, but it's just very likely that we're not going to be in such a volatile bear thing. And there's one other piece of information on that. The times that we've actually been hit a bear vol, so the complete opposite of this, in the last 25 years is less than 20 days. So what characterizes a major market bottom is the bear volatile thing, which is indicative of what we saw in COVID in the late part of March of 2020, where you have 10, 11% up and down days. So those are things that typically indicate a major market bottom. So we haven't had that yet.
Let me ask you, Chris, is there anything in your indicators that would leave open the possibility? Because, I was talking about that, just a downtrend line from the all-time high on the daily to, will come in around 4,100. Okay.
Right there.
Is there anything in your work that says it could end up breaking out over 4,100 and being for a retest or new highs?
It's absolutely open. So a couple of things are open here, right? This isn't definitive for sure. This just gives us, okay, what do we look for? What we're looking for when we're in the red stuff here and negative on the number line. What we're looking for is
trend line. The whole world's watching that.
As you said it, I just threw it up there right now, and I was like, well, that's exactly. It's super obvious.
Yeah.
What I've seen is when you're okay, we put new lows in over here. Right. And then, but this went higher. So volatility was declining as price was going lower. That's indicative of a very calm bear market. That's not indicative of a capitulative.
That's why
VIX
market. People never got paid.
That's right. That's exactly right. Yep.
Okay.
That's everybody's waiting for that 60, 70 VIX, right?
Yeah.
And then, last week, we had the largest short QQQ move in history. And that came on. Here's where price action comes into it. All of this right here, this big bull bar was negated, and it's just ugly, right? It's really ugly. Every down day is really ugly. But what happened? It failed. The best looking sell setup right here. This was like, okay, we're going to 30. We're finally going to 3,000. That's what this looked like right here. What happened?
Yeah.
Boom.
That inflation number, I think, was a 7 sigma event.
Right. Yeah. Nobody was
an earthquake, man.
It was an earthquake. And right there, we saw it this would have been right here where this happened. Boom, comes right in. Yeah. This is the dollar. This is the major currency pairs. With the dollar on the receiving end, it all came in and just changed everything right there.
Yeah.
So what we see in this environment, and this is very indicative of what happened in after March 23rd and into April of 2020, was the best looking sell setups in the world were failing, and that is all it took. I got long. And my crew, we all got long April 5th, and we bought and we bought and we bought and we bought, because what kept happening was this exact situation. It's the bearish thing in the world, boom. Most bearish thing in the world, boom. It's just the best looking sell setups keep failing. And then,
were you wearing a mask when you were hitting the button?
Man,
and were you spraying alcohol on your phone?
I was in Arizona. We were.
Oh, that's right. You guys didn't. Yeah. I know.
Like, why is everybody freaking out?
That. Yeah, I know. But see, the bars in Tempe just jammed, right? So
yeah,
you're right.
Yeah.
All right. So you saw it back then. Does this have like a similar vibe to you?
It has a very similar vibe to it right now, but what we don't have now is that crazy frenzy that we had there. 10 and 11% up and down days, Fed intervention, policy intervention, everything was really hot during that period of time. You can't say the same thing right now. It was like there was a midterm, and it kind of like there was an election. What did something, there's very little other than Twitter and FTX happening. Like nothing's really crazy. And then you look at something like the Dow, at just how powerful it has been, where S&P and NASDAQ are so much more tech heavy, so much more levered. This one is just it just continues. The Dow just keeps moving higher, and it is actually you see we've turned green here. That indicates bull quiet market regime, and a bull quiet market regime goes further and lasts longer than people expect. So painting that picture, I see absolutely your question that yes, the market, most people are off sides. Most people are cool with this. And as you mentioned on the S&P, that trend line, they're probably, we're probably up here, and they're looking to get puts in this area or get short.
Everyone.
Everyone. Yeah. And that's the other unusual thing about this environment right now is the people that are still in it are experienced people. So the hubris, you used the term earlier.
Yeah.
I think is probably going to actually work against, it could work against people in this environment, because everybody, the players this time are way more experienced than they were, say, 12 months ago in the market.
Okay. All right. So tell us about your business model and your services. And, I was on your website. Could put it up again, Chris.
Sure.
And I see that you develop your own EA or your own models. I think that's what I saw there.
Yeah.
Systems,
Yes.
something about systems.
I am a systematic trader, and so at pollinatetrading.com.
Okay.
I was with Macro Ops, my buddy Alex at Macro Ops until the pandemic, and we broke off, and because I'm a lot more aggressive trader than Macro Ops are more of a longer term position trader. So we just kind of like said, let's separate it a little bit. And so I started that pretty much from the hospital when my son was born. And it was, a fun time, COVID, COVID in the hospital. And so what we do is we're very systematic trading. So the corner of everything is the Trading Lab, which is a Slack group. And we live stream during the trading day.
Okay. I'm still seeing the S&P chart. So you may have to reshare to get your.
Do you want me to put yours up? Should I just do mine?
No, just put your website up.
Gotcha. Okay. So this is my website, pollinatedtrading.com. Okay. That's me in the corner up here. Okay. We have a number of courses. So for what we do, everything's systematic, and we want to have statistical data on our on any trade, any system we want, anything we want to get into. We won't just go and say, yeah, we're hoping for that 4,000 S&P, so I'm going to buy some calls right here, or I'm going to go long S&Ps or SPYs or something like that. Like there has to be a systematic approach so that we can wrap risk around it, take our, make sure that our risk reward is set up. And if, we have like
I'm assuming that the more confluence of different pieces of your puzzle coming together builds a case for a strong, more compelling narrative or trade.
Yeah, for a trade, for sure. Narrative, like most traders our win rate's around 50%, fluctuates above and below that as it should be. But if your risk reward is higher than 50%, 1-to-1, that's an amazing business. And that's really what we teach our traders, is to take the ideas of hey, I want to learn how to run a business, not that don't yell at your computer and just take random shots at the market. Turn it into a real business that generates revenue, that is predictable, repeatable revenue, assuming that you have expectancy that is positive, and you take enough shots on goal, for lack of a better term, that you can exploit that thing. And so we have a couple of, the Systems Mastery course teaches you how to build your own system. But for a lot of people, they just want the systems already built. Right. So we have a day trading system, we have a momentum swing trading system, and unlike what everybody tells you, swing beast, and what everybody tells you about earnings season, we actually figured out how to exploit earnings season by buying into the earnings announcement, whereas most people's advice is to sell around earnings because you never know what's going to happen. It's actually quite easy once you figure out the footprints that are being left. So, those are
dark pool stuff or what?
No, it's really price action based. It's really price action based, but it starts from being in the market regime, the appropriate market regime. Got it. The weather has to be right. For example, in the winter, you can see footprints in the snow pretty easily, right?
You're really a meteorologist, aren't you, Chris?
Huh? I'm a rocket surgeon or something.
Yeah. All right. Well, it really was a pleasure talking to you and meeting you. And certainly I could tell I've talked to a lot of people in 10 minutes. Someone, has the acumen, and it seems like you have the temperament and you put in the work. How long have you been doing this now, Chris?
This is my 23rd year.
Okay. All right. So true veteran, still doing it, right, going through adversity at times, and always still on the mission. So I could tell it was, What would you say the biggest lesson you learned during those years that you could pass on to people? If there's, one or two things they have to either psychologically or methodology that they should consider integrating into their plan.
Yeah, it starts with one single setup. You have to have one that is it. If you don't have one single setup that you can repeat over and over, there's no sense in having another one and another one and another one. And if you don't have enough information on that one, you don't have one yet.
And it only takes one, doesn't it?
It's exactly right. It only takes one.
Yeah,
absolutely.
One that works. And so then what becomes your enemy when you have that one is not having the patience to wait for it again.
Absolutely.
Does it sound like I've been doing that I've done that I have one, but at times I don't wait for that one.
Every
so
trader.
That is really a great statement. I haven't heard that from anybody. It only takes one setup that you can depend on that's a high probability for you. And well, that's a Pearl. Okay, you win the Pearl Award, Chris. And
lovely.
When you get through an interview with me, you become my trading warrior brother. So I'm rooting for you and what you guys do, and would love to have you back down the road.
I'd love to be on. It was great chatting with you, Dale, and meeting you and hearing you guys chat as I get chances to from time to time. So I really appreciate you having me on.
Yeah. So follow Chris on Twitter at Chris D Macro and check out his website. Definitely could be a great part of your intelligence gathering for the market. And we'll talk maybe next time we're talking, we're above that trend line. I think we will.
Yeah. I think
for a while anyway. For a while anyway. So Chris, happy holidays coming up. Have a great trading season, and thank you for sharing your journey and your work with us today.
Hey, thank you very much, sir.
And giving me confirming what I've believed for a long time. I knew guys, Chris, that never left the cattle pit. They didn't roam into the hog pit and the belly pit and the currencies. They knew one market like the back of their hand, and they never had to be a diversified trader. It only takes one.
Yeah. That's,
you know what I mean?
I do, and I know those guys too. I came across a few of those guys. They wouldn't know what a yield was or anything. Yeah, it's awesome.
They just trade the flow. So Chris, thanks very much for being with us. A great way to cap off the week. Good hunting, buddy.
Thank you very much, Dale. You have a wonderful weekend.
All right. Chris Stover, everyone. Check him out. Follow him on Twitter at Chris D Macro. And thank you, everyone. Hope that we were able to, give you some added value this week. The way to say thank you is to, try the trading program or become a member. Shabbat Shalom Amira. And above all, don't just count your pips, count your blessings. See everyone Monday. Thank you. People are thanking you, Chris. So have a great weekend, everyone. Adios.